Hey, this is Elliot with Sage. I'd like to kind of give everyone a quick update. Like always, none of this is financial advice. Always do what's best for you. So this market is continuing to grind higher as expected. It I don't expect big moves right now until we get to the new year, and then we'll have a pretty big move one way or the other. So we have this impulse. We had this flash crash type correction that really reset the Stokes and cleared the whole cycle, but pretty much blew out the weak hands. And now we're grinding higher. So if you're in the market, you got to respect uh, two possibilities I see here. Of course, you could be in about to go into a wave three, which I think we are, to finish have a strong January, and then sometime in February we get that rug pull. Now that's kind of what I'm thinking. Now we saw this before Volmageddon, I think was February. So I do think we could continue to squeeze higher into next year. Now there's some other alternative counts here where we're going to do a flat. Well, and if that's the case, we should pretty much reverse today. And if you see a hard reversal down today, we could see this flat like that, potentially retest there. But if we could take out this peak here, which we're really close to doing, then you have an impulse off the low. And we could still pull back, of course. Here you have a 1, 2, 3, 4, 5, and now you're in some kind of two wave. So this 2 could still pull back a little more, but it doesn't have to do that. It could keep growing, going higher. Again, a reset of the cycle. That's how severe this drop was in terms of intensity. So short in time, but intensity strong enough to get us going. And as you can see, we have this channel line that this trend line, and we want to stay above that. If we start breaking that, then we could go be back in some kind of two, or this two could drop to retest that low. But I think we're just going to keep grinding higher, guys. I'm looking for 520 SPY, triple Qs, 448, 450, Dow, 39, 40,000. That's where I'll be much more cautious and conservative uh, when we're there. And again, it's not what I want the indices to be, not what they deserve to be. They deserve to crash. They deserve to, they're so inflated, so much debt, you know, so distorted from reality and fundamentals. It doesn't deserve to do this. Biden doesn't deserve this, break. No one, everybody has a bias, and they think they can outsmart this market. But like I say, guys, the market isn't chess. You're not going to outsmart this market. The market's going to fool you. And I believe a massive run up that goes even more parabolic will surprise everyone, both sides, which is why it's probably likely. And then you get, like I said, your Twitter bull guy say, "Oh my God, this is crazy. Buy puts." Haven't seen it yet, but when that happens, that's it. That's the end of the move. You know who you follow. You know who you follow out there, who you pay to follow even, and all they say is buy the dip. Hold Microsoft. Hold Google. Just buy Google. Buy Apple. Oh my God, Apple dipped yesterday. Buy it. Holy shit, buy Apple. Oh, it's gonna break. I can't sleep. Those guys, when they start saying, this shit's crazy, buy puts, this market's still going to go higher. It's still going to go higher. So that's the thing, guys. The market's going higher. We're in an expanded flat, and we can go into this area. We go in this area. We even test the top of the channel. So there's no reason to be bearish anymore. There really isn't. And honestly, if we do pull back deep, and if this is some kind of 1, 2, 3, 4, 5, and we pull back deep, it's a buying opportunity for this run. So the market's set up to not crash just yet, but it will. This crash is coming. This crash is coming. A calamity of biblical proportions is going to happen in 2024. Something so horrible, so horrific, no one can even contemplate the scenario. But there is a scenario coming where the market is going to go into mass chaos, mass chaos, and also the dollar is even showing that now. My updated dollar chart looks something like this, long term. So we have, let's go to the weekly. So essentially the dollar's in a massive bear flag for 2007, three-wave move for W, three-wave move for X, and we need that three-wave move. So we're missing the third wave of Y, and that should set X, and I would expect an overshoot of the bear flag or a retest, ideally right here, but we don't know the timing, but we do know this coming, and when this comes, it should be risk off. It should be a massive calamity, and then the Federal Reserve comes in to save the day with more quantitative easing and money print in and print at all cost, and the central banks around the world go, quantitative easing crazy, and that's where you get this multi-generational, inflate your way out of the mess wave. So that's what this is. This is what this is telling me here. Or this is a hyperinflationary impulse, and the indices go into that massive bear market. So a lot of possibilities here, but this is where I see the dollar going. The dollar has got more downside, so therefore the market has more upside until the dollar is trading at 96. And it's just the way it is, guys. It's not what I wish it to be. It's not what it should do, what it deserves to do, what Biden, doesn't deserve this, or what I've heard so many other reasons why the market should crash. Oh, it's gone up too much too fast. So everyone's trying to top tick the market, but that's not how tops of bubbles pop. They pop when everyone's all in and everyone is saying get in. In the Great Depression in 1929, if you study that top, everybody FOMO'd in at the top. There was nobody except for a few people calling to get out of the market. I mean, the last 2 weeks, all I heard is people paraded on CNBC to raise cash, sell. It's going to be a bad year next year to reset what happened. That is not a bubble top, guys. That is not sentiment of a bubble top. That means people are still in denial of this rally, and that means even if we pull back, that money will want to come back in. But I don't think it's going to pull back. And I think Bitcoin is telling you that. Gold is telling you that. Silver eventually will. This market's just going to keep grinding higher. It's just going to keep grinding higher. You don't short a wave, a wave three. In an expanded flat, that's essentially what this is. It's a truncated. It starts out as a wave three, right? 1, 2, 3 of a 3 of 3. That's why it's so strong. And then you get this massive rug pull. And that's why it's so devastating and so many portfolios are ruined with it because people just can't let go. And the best example was 2011, this expanded flat here. And many people lost many, a lot of money here on this rug pull right here. And this was a classic expanded flat pattern that destroyed many traders right here. This is what I think we're going to get. Guys, this is what I think is coming. And I think right now, we're here. We're here. We're there. Okay? So get ready. Get ready. Get ready. That's what's coming. That's what's coming. But right now, there's more upside. There's more upside coming. And and like I said, don't try to outsmart this market. Think of it as a game of poker. And if you're a poker, you need news to drive the sell-off. So you don't have news yet. You have no news event. No news event to leverage. So it's just going to keep going higher. Because the sellers are going to hold back. And they're going to let the pot grow. The stakes get higher. Let people get more trapped. All right. Bitcoin is very bullish because the dollar index keeps falling. I want to see this drop. Now, we got this drop here. This could be a connector wave. We're starting to make a move down. We'll see if we can get this follow through down today. We'll have to wait and see what happens for a buy in crypto. Nat gas is just trying to shake out the weak hands, and nat gas is crazy because now I think the shorts have overstayed their welcome and they're about to get blown up. I think what's happening in nat gas is about to go on a run. Oil looks like B just extended a little bit further, and I mentioned if we continue higher, we'll have to change the sequence to a 5-wave move down. And in fact, I probably should do that right now. So we just change it to an A, B, C, something like that. And a 1, 2, 3, 4, 5. Gold is pushing higher. Be interested if this rug pulls. No guarantee, but if it does, that would be a great dip buy. But I don't like 1, 2, 3, 4, 5. It should not take out 2090 should be it. It'll be very interesting to see how gold trades soon, how Bitcoin trades, and so perhaps the dollar is due to rally hard. Perhaps we're going to get a counter trend rally in the dollar, and then this turns into 5 waves, something like this. We're going to get this B, and then that's going to be this not rug pull, but like this double correction I was showing in the indices, where we either get 2 comes down, or we get the flat like that. But either way, it's a massive opportunity. The market's bullish above 453. Every dip should be bought above 453 until further notice. That's a trading strategy you should take. You lose 453, the conditions have shift to bear, long-term bear. Above 453, market's bullish. Buy the dip. That's the strategy. It's that simple. I can't make it any easier to understand. All right, so that's that. Let's see. Well, Russell, Russell's different. This. Again, it touched the 4 low. It got support right where it needed, and now it's going higher. This is a sell area in the Russell actually, and we're getting there. We got to keep an eye on it. But like I said, the Russell could still do an expanded flat itself and go to new highs. I mean, so it's really not something I like to trade, but just keep an eye on it. No shorts. The triple Qs again should continue to push higher. And if we're still in 2, fine. It's a dip buy, but we're breaking the new highs, and it should continue higher. Okay, that's the big picture in the market. The VIX, the VIX is interesting because it made a 3-wave corrective move, so it did correct the cycle, like I mentioned. Right, we broke the trend, we had a massive flash crash, and that was it. So what could this be? Well, this could be just 1, 2. And we could keep going lower in the VIX in a bigger 3-wave move. 1, 2, and head down to these areas. Don't think it can't happen. This VIX cycle could have been already corrected. Could already been corrected. So there was an opportunity on the short side, but you only had it for a few hours to get it. And some people did. Some people 0-day puts went up like times 15 because they caught that. But you had to catch that and be lucky. Now here it is. So this is where it's going. I do think it's coming down into this area. May even come down to the single digits eventually. Okay, that's that. Let's go through some of my other stocks that you guys like to trade. Apple hit a buy area. It did. So Apple's in a tricky spot. If it's in this X wave, this dip should fail here. If we take this high out, then it's in an impulse off the low, and it's much more bullish, and the market would be much more bullish than I have, supporting the kind of blow off top. So we'll see if this can hold at 190.96. I'm not trading Apple, but I just kind of saw this and observed it. So a very important pivot that has to hold now. So it's just like just some market awareness. AI gave a good entry here for a bounce play on this move. 3 waves. Could be going into a 3 of 3. This is a good pivot to trade against. 28.42 on the long side. AMD is just not pulling back. I think, and it's safe to say AMD, this is a connector wave and it's finishing its C wave, and I'll have to update that chart because we did have 5 up, so we knew this high would take out, and now that it's taken it out, now again we could be looking for an expanded flat, new all-time highs. We see we had this C leg coming. It just looks like it came earlier than we all thought, but eventually it will end in misery and pain and despair. But it's still, right now it's great, feels good, go long. And I think it's destined to break this high. Again, it could do an expanded flat here. It can go as high as 191 even. Could be a lot more upside here in AMD. Watching Palantir, we're not getting that breakdown, but if we get this breakdown, this would be a good opportunity to go long Palantir. Nvidia is struggling. Again, we could still be in 5 by struggling, and if we are in 5, then maybe we get the 560 at the most. Microsoft, same thing like Apple. It's indecision. It could be a 1, 2, 3, 4, 5 to negate the flat. We don't know. It's stuck. I did like Symbiotic here, as long as it's above this pivot here, 50.61. You could get this breakout, which is good. IONQ broke a pivot here, broke it to push more downside. Like to pick that up at 12. Let's see, what else do I have I want to show you guys. Shopify is also a good setup for a double correction if we can get that pullback to 73. I like that for a long here. If we can get that, if we can get this 73. Okta breaking out like I mentioned. If it comes and back tests the breakout line, that would be a good long opportunity. DraftKings hit the buy area. It's bouncing. It's forming a connector. I would rather buy it if it pulls back one more time. I don't like buying it here. It's too short, and I want to get another dip if I can. GameStop's about to break out. If we're lucky enough, looks like we got the 3 wave, a nice dip buy to get long. And now it's almost on the verge of a massive breakout of a massive inverse head and shoulders. I mean, guys, this is classic chart pattern 101. Target 23. We'll see if that happens. That would be a nice trade. Fubu is the shorts for some reason. I think as soon as I posted my buy alert, everyone started shorting it, but they're actually it's failing. Whoever's trying to do that, trade against that, is starting to get blown up here. This leg is over. We're in a new cycle. It could be a 1, 2, 3, 4, 5, and so we can still get more chop, but eventually, just like GME, it's going to break out, and it'll be a massive short squeeze. I like it. I don't like any of the green stocks until oil's down at $50, which is coming next year. So I won't go anywhere near that. NEO was getting some pump action, and look, NEO did exactly what I thought it would do. A fake out and a ramp, and it did the ramp. Now it's in danger of the drop. So we got the fake out, the ramp, and drop. Now it's in a very dangerous area to go long. If you bought it down here, you should be selling some profit. If we break 950, the 2 wave can run more. Let's go to healthcare. Healthcare mRNA does look like it's ended this correction. It looks like it's extending. I don't know why it's pumping, but you know, that looks like 1, 2. So like it's about to go into a 3 of 3. And again, you've been following me. We called this bottom at 85. It actually got even further down, further oversold, and now the correction's over, and we're back within the downtrend, just like pod did, and pod's now like up here. So this correction's over. mRNA, like I say, if you guys like to be in it, this is where you just kind of, if you're a long-term investor, you just buy it, and you just don't look at it for years and years. Like whether you buy it at 100 or you buy it at 70, you know, in 5 or 10 years when it's trading at 400, you're not going to care whether you got it at 100 or set. You're not going to care. So if your long-term strategy is long-term investing, there's no better opportunity than picking this up right now. And if mRNA is out of this correction, that means the sector's out. That means the XLV could be the hot sector of 2024 that you may want to be in. If this is true, so keep that in mind. Looking for this final little dump in Lilly to get long for 5. Just hasn't happened. Pfizer, my buy alert on Pfizer worked out pretty well, but it's not out of the woods yet. Anytime you get this like ricochet, sometimes that's a 4 and then you get a 5. But if we do that, that would set up a lot of bullish divergence and would be an even better opportunity to put some significant money to work. But my guess is it's not going to dip. It's just, it will pull back in a 2, but I don't think it's coming back to break this low at 25.72. But do what's best for you on that. Pod just keeps extending off of this low. And yeah, just that's all I got here for now on the healthcare side. I'll just click through a couple others. Discretionary, Nike's been getting obliterated. I can't tell what the structure is, so I'm not going to buy the dip in Nike. Lululemon, new all-time highs. I mentioned not to short this anymore, especially with the GLP-1s out there. People are going to be buying new clothes. And this thing is going to... Lululemon is, if you get a pullback, you want to go long. You want to go long if it pulls back. So let's give a new setup on Lululemon here. A new setup on Lululemon would be 501, 499 with a stop loss at 496 in this area. May get that. Let's watch it. Starbucks too. Should be coming out of its correction. Yeah, I don't like trading it. Never mind. I don't like that chart. All right, so that's staples. I'm watching Celsius. We're looking again like Eli. Want to see the final dump down here. Again, we're just not getting it. But if we get it, this would be the area I would rather buy it. I know everyone trades this AEHR. Just like I had here, we're in the Y wave. Y can extend. This could be a connector. I'll go up to 38. Back test even this downtrend. Or it could be done at 30 and take another leg lower. The other alternative is it makes a marginal new high in a 1, 2, 3, 4, 5, and then this marks the low. You get 5 up, you pull back to 25, and then you run in another 3. Cryptos, yeah, these equivalents are just going crazy right now. People are panic buying. Mara going parabolic. And looks like we did get that dip buy in Mara here, I mentioned. So even though you would have felt like, oh man, I missed the move, I would have, okay, I got a nice 3 waves. I bought at 25. I think you're probably pretty happy right now. So I don't think it really mattered, you know. But that's how you trade bullish markets, guys. That's how you trade bullish markets, by the way. But that's why like Lululemon could do the same thing, right? I just showed you, you know, you just don't know. You don't know. The amount of FOMO is intense right now in crypto. which is setting you up for a really good, nasty sell-off soon. Commodities. Let's take a look at some of the commodities like Chevron here, oil. They're going to run. They're running counter trend as oil is getting a bid again. This could become a 1-2, 1-2, which I suspect it is before we get a bigger decline. XLE, I told you there's a possibility that it could be more bullish than I have here, where this is a 1-2, and we're in another like or running flat. I'm sorry, running flat. So this was an opportunity for a long setup right here with a stop loss at 80. But I don't. The chart shows it should go. It should continue lower. But But there is a chance it may go higher, based on what I saw in the OIH here. But we'll see if we get that breakout of the OIH. Boyle, everyone loves Boyle, right? Too many people love Boyle. So Boyle is gonna, right now I got it as 1-2, 1-2. If this is right, we should be getting a run in Boyle soon. Pretty significant run. If this is right, now this could also be a 1, 2, 3, 4, 5 and pull back to 25. So too many possibilities, but against 2370, it looks like to me we're trying to form, here's your left shoulder, we're trying to form this head. And so the buy here is in this, let's say between 23 and 30 for a sell eventually 60 to 75. That's the trade. And Boyle, buy here, trade here, and then get a lot of pullback to get the right shoulder. And then at some point in the future, a massive breakout into the triple digits, but not for a while. And not before you get this like a lot of chop in this general vicinity. So I do believe we'll come out and into this area soon. GDXJ, this was another one I was mentioning before. Right now I'm just going to call this a 5-wave move like this. It should end soon and pull back to 34. Something like this. The thing it could do is it could always extend and erase divergence, but I don't think that's likely given the overlapping nature of the waves. We'll have to wait and see, but this is a massive long-term trend down breakout, I think, on the long-term downtrend line. So it may not we may not get this pullback, or the two may be very shallow. U 1, 2, 3, 4 should be getting this 5th wave, and then again a breakout. So it may actually be a 1, 2, 1, 2, and it just missed the area by 10 cents, and then it just really, just really shot up. So this, I do like this, but I think the entry was here, but something to keep an eye on if it pulls back again. Okay, so my video's kind of long today. I just wanted to tell you guys, the market's going to keep grinding higher. It will be pullbacks. It could be choppy, but I do believe we still have more upside in this market given the technicals. I believe the bears have now stepped aside for a little bit. They're going to wait for the right news event to leverage and then really drop the hammer. And it's really a lack of sellers is why the market's going higher. But there is a lot of skepticism still, especially with the CNBC cloud. More than I like to see for a bearish market, because that's not what happened at the end of 2021 to 22. They were all punch drunk bullish on CNBC. I never saw so many people, pump a Santa rally on CNBC. You're not seeing that right now. So you're seeing a lot more cautious and like conservatism and like, sell this, sell that. So I actually think it's good ingredients for more push, more upside. Whether you think, again, the market deserves it, Biden doesn't deserve this, Powell is an idiot and it just shouldn't be happening, whatever you think, it doesn't matter what you think. The technicals show you the market is going to go higher. And the reason, again, why does Elliott Wave Sage think this is going to happen, this rug pull? The reason I think it's going to happen is how we bottomed. Essentially, you had a bottom without capitulation, which means there's weak hands in the market, which means the weak hands never really sold here. And in fact, more dumb money bought here than they should have because they were too desperate to buy. So you never got that shakeout. And so all those people are still long, which is obvious, right? They're still long. And then what happens here is they finally get shaken out and they sell, and they're the ones that push it through. So this tells me, this setup here tells me the bottom is it's like on quicksand. It's built on a poor foundation, dumb money, speculative money, uh, naive money, money that got complacent, that didn't sell. That there's no panic here. And right now they're spiking the football, thinking they're the smartest people that ever existed. So when this pullback starts to happen, if they didn't sell here, they'll never sell here, but they'll just won't sell. But this one, the nature of this move will be different because there'll be more trap buyers that did FOMO in up here and here, and then they'll push it. And then eventually these people that held, they're going to actually be make a full round trip and be underwater, and then they'll panic sell right around here because now they'll see all their money gone and they'll feel like idiots for not selling up here. That's what's going to happen. That's the psychology of the market setting up. But I do think this is quicksand. The other alternative, like I said, there's always alternative. It's a truncation, which is very rare. I don't see a lot of these on the daily and weekly time frame. A truncation, which is extremely bullish if that's the case, which would lend us to a blow off top, which would mean it's just defying all historical norms. And a lot of people are calling this some 4 and 5. It's not, guys. If this rug pull doesn't happen, it's a 1 2 1 2, 3 of 3. So that's why in some ways too it's good to be long, just in case this doesn't happen in B. If we break 560, then the moon boy scenario is in play. The blow off top of the ages is in play, and I do believe you get this 1 2 1 2 3 4 3 4 5, and that's it. Just like the Great Depression, someone posted there was a channel, if you go back, that was violated, just like we could see there, and then that ended the blow off top in the Great Depression, right? Because again, smart traders, here's your channel, right? So it's not perfectly parallel. I'll fix the lines later, but oh, you're in this nice little channel, and just like we have here, and we're coming off, and oh yeah, there's Elliott Wave Sage. If Elliott Sage was alive back then, I would say, oh yeah, there's gonna be a rug pull, guys. Right, there's gonna be a rug pull right there, and then it just doesn't happen, right? It just doesn't happen. Here you even had done. You have a 5-wave move down, so this was actually a big flat here, and then A, B, C. So it's probably more something like that. But my point was probably more like, so this correction was a little more classical. No, hard to manipulate the market back then. So this was just an AB, massive expanded flat. So look, guys, this is actually my prediction right now. So, and I'm just kind of looking at this for the first time here. If you take a look at this, this is what's interesting here. This is my future outlook here. If I can draw it. Let's see here. There. So I think we could be like there, okay? And we get the rug pull. And then, well, remember what I said comes after the rug pull? This. Look at that. That. I think that's what's going to happen. So this is what I think this is 24. And then I think this is the next until the end of the decade. Just like you see here. Just something just like this. And then guess what comes? This. Right? And then, oh, all those gaps fill. So this is exactly what I think we're going to see. Now, the moon boy scenario is we're actually, somewhere like here, right? And we're going to get the moon boy. Something like this is coming, and then you get this later. And of course, you break all the lows of the last 10, you know. So either way, whether you're here or whether, you know, we're here, I think that's coming there because of the higher high sequence that we just made. So either way, no matter what happens, the market is a buy in the long term. This There is going to be no Great Depression in the foreseeable future. Not this decade. Next decade, maybe. But my guess is, like I said, look at this chart. This is the chart I have. It looks like the Great Depression chart, right? A flat, just like I have here, followed by a massive run up, and then a massive crash. You see that? That is my prediction, just like you see here. That's what I think is coming. The surprise would be that that doesn't happen, and we just melt up in Moon Boy to SPY 1000, and then the crash comes like that, just like I have here. So, you know, you have to do what's best for you. But I do believe that's what's in store for investors. That's what's in store for investors. A roller coaster of epic proportions. But by breaking the high, it sets up a higher high sequence. It makes this a wave 2, not a wave 4, because of how long in the stochastic reset here. So it's setting you up for this later. But like I said, right now the best way to trade the market is trade it above 453 on the long side. Play for this area for the rug pull or the moon boy. Rug pull happens around 510, 520. Moon boy have to break 560 with acceleration, and we'll start seeing it, because if we get moon boy, we actually should start seeing gaps and see like the indices 3-4% higher on day. Like you'll start seeing it crash upward. Circuit breakers to the upside. You'll see people begging on the shorts to have circuit breakers on the upside. That's probably what would happen if we moon boy it. Mass FOMO. All the money market money comes into the market. All the people that sold down here because, oh, it's the market just can't go down anymore, they're the ones that will absolutely get obliterated and FOMO in up here and push this market to unbelievable heights. The other option is they sit on the sidelines, they wait, a massive event happens, they leverage it, they drop the hammer, and mass panic. And just like happened. Just like happened here. In the Great Depression era, the 20s. All right, guys, that's all I got. Good luck trading today.